travel for the day. Clearly, it's continued upward momentum in the oil price. In the open in Asia today, we've got a big bounce up after a big bounce up yesterday. This morning, we've got Brent up 4.5, well, both Brent and WTI knocking on the door of $110 essentially, which must have made relatively uncomfortable reading, so to speak, for the State of the Union address that just finished. President Biden, his first State of the Union speech. So let's go straight to America and kick off this morning, which is now last night in Florida, where Randall Mohammed, Managing Director of Petro Industrial USA. Randall, what's your big takeaway from Biden's speech?
Good morning, Sean. Good morning, everyone. Yeah, Sean, well, as you know, it was the State of the Union presentation today. So I think the big takeaway is he sort of reinforced his position on Ukraine. I think some people expected, a bit more harsher penalties for Russia. I myself expected to sort of hear the banning of importation of crude from Russia. As you know, the United States imports just under 600,000 barrels of oil per day from Russia. And I thought we were going to simply say, okay, let's cut those exports tomorrow. We didn't get that. And of course, the no-fly zone is definitely off the table.
A no-fly zone in Ukraine, you're talking about?
Correct. He has banned Russian flights into the U.S. Thus far.
Yeah, the request from Ukraine for the NATO allies to enforce a no-fly zone in Ukraine would essentially drag them into the war, and that is a complete and utter no-no. But still, you can imagine why the Ukrainians would want that, because they're obviously quite vulnerable. Peter McGuire, CEO of XM Australia. Peter, does any of this matter, whether Biden's sanctioned or not? The reality is that Russian oil is going to be coming off the market. Traders don't want to touch it with a barge pole, including a minus $18 discount barge pole. So Russian oil might as well be sanctioned. Your thoughts?
Yeah, well, that's so true, Sean, and it just comes down to as far as global demand and how that plays into the market over the next month or two. So all the moving parts need to be examined. We understand also energy and gas consumption coming out of Europe and Asia. So this is unusual times, and we're building on the SWIFT system. We're building on over the weekend what that entailed and the impact of Russian banks and to the economy and the ruble and so on. So we sit here and, like it or not, at $110 a barrel, the loser certainly is the consumer globally. The producers are rubbing their hands with glee, and inflation's out of control, and all of those impacts need to be considered to what we're feeling in Main Street and when we fill our cars up at the pump.
Albert Stromquist, principal at Landstrom Advisors, sitting in China. Albert, very curious of what this all looks like from China. So many questions, but let's just start with what seems to be the overnight kind of slight incremental shift in the Chinese position, one of which was fairly reclined and supportive of Russia to overnight indicating the sovereign integrity of the Ukraine to be protected. I don't know if that's a shift, but again, what does this all look like from a Chinese perspective? And can we expect China to be importing a lot of Russian oil?
Well, thank you, Sean, and good to see you again. Look, your question has already given a lot of context to the answer. The respect for sovereignty has always been part of China's toolkit. So that's not new. My take is that the government here in Beijing was hedging, that the invasion was a threat but would not actually go forward. Therefore, the support for the Kremlin was kind of predicated on probably an honest belief that we'd find a diplomatic way through it all before Russian combat troops actually hit the ground in such a devastating way. So therefore, yeah, overnight, there has been the first steps in kind of walking back the support that had been given explicitly a week ago, which is now softening to a plea for diplomacy and disengagement. And that is a substantial change.
Albert, given that, what is at stake here for China? That's the question I struggle to get answers to myself and really articulate. One could see a few things, but what would you look, sitting in China, what do you think's at stake for China in this, and so consequently what posture they take?
Well, I think simply speaking, an ally, a strong ally. Well, yeah, China's kind of struggling to can define itself and to invigorate its Belt and Road Initiative and cultivate its friendships in Africa and South America. And that's going very slowly. And those are all kind of relatively small counterparts to China's ambitions. The big counterpart is Russia. And they do share an ideology, political ideology with Russia of sorts. And they have a very strong and deeply enmeshed partnership in trade, energy trade, industrial investment, education, tourism. All of that is important both to Russia and to China. So I would say an ally, having a strong and stable ally that China can move forward with to confront the rest of the world is probably the key driver in this.
Just again, for Albert, is there any point in which this ally can get too toxic to be attached to? It's become too toxic for ExxonMobil. It's become too toxic for many actors. Is there some point where this relationship, where Russia and Putin become potentially too toxic for even China?
Well, they haven't tipped that hand yet, right? So you just be predicting into it from a crystal ball to say that it could become too toxic. That's an imponderable that I really don't have an answer to, Sean.
Okay, Randall, let's go with you on that, because today we have the OPEC Plus meeting. They're going to have to face that question. They are, a number of them, very close allies with the West. And also the very simple other question, as an organization to manage stable oil markets, as we've just been talking, it's hard to see them going into that meeting and ignoring the fact that Russian oil supply in the month of April, which is what they're deciding today, could be significantly disrupted. Do they need to act? How do they need to address that particular issue, supply shortage?
Sure, that's a good question, Sean. And I think it goes back to whether OPEC really believes Russian oil would be curtailed. If they really believe that, then yes, they're going to have to step up their production. But the issue with OPEC, Sean, is where they're going to find the extra barrels from. I mean, yes, Saudi is still defined as a swing producer, which means they can put 2 million barrels onto the market within 90 days. Between Kuwait and the UAE, you have probably about 600,000 barrels in spare capacity. But the question is, are they willing to toe the line? My sense is they're not. I think they're going to stick with the original plan, which is the 400,000 barrels per day. Mind you, in February, I believe they got up to about 420,000 barrels per day. Whether they can sustain that, I don't know. And of course, on the US side, yes, the White House may have implied, look, guys, we need to increase oil production. But as you know, Sean, the landscape in the US is quite different from many other countries. US production comes from independent private oil producers. And, you know, at the end of the day, it's about the price of oil and the cost to produce those barrels. It's all about the margin. So if the shale producers believe that it's economical, yes, they're going to produce. And then, of course, one could argue, well, what about the federal lands, for instance? Could the Biden administration lift the ban on fracking, and lease and permit and allow permits to drill on federal lands?
Peter, just following on from that, we also have the announcement overnight of IEA 60 million barrels of SPR release, again on the eve of OPEC plus meeting. How do you think, I mean, the reporting from the news agencies and others is it's going to be a simple rollover meeting, nothing to look at here, we're just sticking with what we got. Do they need to think about other things? Are these other things likely to come into their conversation, do you think?
Well, it could well do, Sean. I mean, the impact what it's had to the market has been the market's gone parabolic in the last 24 hours. So as far as the interpretation from a trading perspective, we're at 110. So, you wake up overnight and it's up 7 or 8%. So there's the first part. So that's the interpretation from a trade perspective. The second part is the sensitivity with this whole argument. There are so many components that need to, I think, certainly be considered. Where's the SWIFT system and what impact that's going to have to the Russian economy? What is the relationship? And having been to OPEC many times and seeing the way that the body language between the Russians and certainly the Saudis is and the UAE, you would have to say that they're singing from the same hymn book. So this could really, I think, from many different parts, I'm interested to see what comes out of OPEC and their mood towards their brother being Putin and Russia. So the interpretation is going to be, if you play really hardball, maybe we all band together and change the fabric to move ourselves to possibly being dealt and paid for in gold or crypto. I'm even thinking along those sort of lines, Sean, and I'm hearing that mooted across many different traders. So that's a different scenario altogether.
Albert, your thoughts on that, but also taking it from an Asian perspective, $110 oil burden on your biggest customers, OPEC plus is OPEC's biggest customers, at least, China most notably, but ultimately this is a big dollar number for emerging economies coming out of COVID to absorb. Do they need to be taking that into consideration and the possible erosion of demand erosion?
Sure they do. 110 is a big number. And the EIA decision yesterday to, in conjunction with the U.S. and other importers, to release 60 million barrels, that implies a 2 million barrel per day buffer, right? That's the way it's been positioned, okay? So 2 million a day buys you a month to come up with a better solution. Right? The question in my mind, and is China actually one of the parties to this release, right? And that would play into their policy on mitigating oil price increases at $110 a barrel. And my question, I haven't been able to find an adequate answer to it, is there must be terms and conditions to these releases, right, that transfer crude oil at cost to the refiners. But what are the conditions on the refiners to actually pass through that savings in wholesale prices to the retail outlets? And I don't see that. Otherwise, it sounds like so many nice words until you actually have some confidence that there is a robust policy in place, right, to ensure the delivery of discounts from the release of the petroleum reserves. So if China is kind of part of that strategy, that would be one step they would be taking to mitigate the higher oil price.
Albert, we did see in recent weeks that the Chinese, much to most surprise, were increasing their imports of oil. Perhaps they had foreseen this event happening, but there was a sense in the market that China wouldn't buy at these prices, and that was in the 90s or so on. Now they're obviously above that. How does it look, the US or the Chinese economic outlook? There's been question marks that the impact of the higher cost of all of these commodities, the slowdown in China growth coming this year. What's the outlook at this point coming out of the Beijing Olympics and the sort of New Year period and so forth going ahead?
Well, it's a much more modest view of the future compared to the robust double-digit growth of the past 2 decades. The question of what is going to substitute for this massive investment in construction, in hard assets over the past 2 decades to deliver a sustainable growth trajectory for China. The housing market is pretty saturated now, plus the government has put some pretty tight restrictions on buying housing in China. The airports are mostly all rebuilt, right? The railroads are saturated, railroad terminals. Military has completed a very vast expansion of its hard assets. So, that demand for steel and energy is evaporating very quickly. So what becomes the sustainability strategy for China post this industrial peak?
Randall, looking at the situation from America, obviously hearing the China outlook, the US outlook, I mean, we were on the doorstep of a big tightening cycle kicking off with the inflation being the biggest sort of narrative at the beginning of the year. Biden addressed it as central of his keynote address last night. And we have now Jay Powell got to digest all of this, speak to the Congress, I think today or tomorrow, and give indications as to the decision they will make next week. Should the calculus of the Fed be changing? What's your thoughts on where that goes?
Yeah, that's so my thought on this, Sean, is look, yes, we are still grappling with inflation. 7.5%, it's extremely high. Gas prices at the pump right now are pushing in excess of I think it's got up to in excess of 3.53 per gallon, which is quite high. But my general sense is that Powell is going to be a lot more conservative now, given the Ukraine-Russian crisis. Some bankers, forecasted, 50 to 100 basis point increase. My forecast is he's going to stick with the 25 basis point increase, and he's probably going to gradually increase that over the period of 7 quarters. At the same time, they're going to have to reduce their asset buying, scale that down to probably by $15 billion per month over an 8-month period. And of course, they got to keep their eyes on the S&P 500. You got to keep your eyes on the unemployment claims, and you got to keep your eyes on the money supply. Those 3 key indicators they're going to have to keep their eyes on.
Peter, given that point, ultimately, where is the market at the moment? Because we have kind of baked in the idea that, at least only a few weeks ago, that there was a growing momentum towards a much more robust tightening. And you were asking in your own daily commentary about would New Zealand go the 50 points or would they go the 25? And they obviously went the 25. But how big a disruption is Ukraine to the tightening cycle, and hence central banks' ability, monetary policy makers all over the world, to get ahead of inflation when clearly now they will not get ahead of inflation? And how should we adapt to that reality and stop fooling ourselves that they were ever maybe going to do it, but nonetheless, certainly not going to do it now?
Well, exactly, Sean. If we put our minds back only a couple of, maybe, 6 or 8 weeks ago, I can't recall the number, but it'll be around then. And Jamie Dimon said we're going to see 7 rate rises this year. So it was only in September last year, and there was talk that you may not see one. Then it was all of a sudden the velocity picked up. October, November, then it really started to gather an incredible pace. I'm hearing some analysts are even saying now we're back down to 5, possibly 4. So everyone has a different view, and the view is very much, as Randall mentioned, the explosion to the upside as far as inflation. They can't seem to rein it in with high energy costs and high everything else as far as food. So it's going to be difficult to manage those expectations, and what tools, naturally the Fed, but the other side, as far as the consumer is going to appreciate, higher rates, higher mortgage costs, higher cost of just living with high inflation and higher costs. I think it's going to be a pretty tough year on the consumer in 22, Sean. And I think the Fed's got to take a pretty much an even keel sort of approach, because they can get ahead of themselves if they start ratcheting up too quickly. You've got to think of the other side as far as growth and what's happening to the domestic economy in the US. And with now the situation with the Ukraine, that really puts the focus, I think, on that matter. And that's where everyone's got their focus at the moment. I think that Jay Powell will certainly make comment regarding that.
I mean, in your neck of the woods too, Peter, again, the Asian demand piece, you've got the $110 oil and you've got the strong dollar. So you've got the double whammy here. Where do you see dollar going? Flight to safety?
Well, I have to be, Sean. We're at 97.45 at the moment. That's a US dollar index. So it's had a very, very solid move to the upside in the last 4 to 5 weeks, creating much opportunity for traders with that huge volatility swings. And it just seems to be ratcheting up. And that flight to safety, as we all understand, Biden's address and the storyline as far as Fed coming into play in March, I know it's all baked in, but that flight to safety, I think there's a 98 handle there for US dollar index, maybe in the next week. So that continual grind up from here. 97.5, we haven't got far to go.
Absolutely. Let's go to the survey question. It's hard to say. I mean, OPEC Plus, they couldn't pick a worse day to meet, maybe be a record. It won't be a 16-minute meeting. It'll be a 2-minute one. But the question is, do OPEC Plus need to consider the disruption to Russian oil supplies when they meet today to map out April's supply? Do they need to consider the disruption to Russian oil supplies, i.e. that this is now a reality? Russian oil supplies, whether they're sanctioned or not, already are the disruption has happened, has started. How big it will become? You've got Exxon pulling out, BP, Shell, OMV announced their plans overnight to withdraw. I mean, there are more long-term impacts, but ultimately on the shipping and trading side as well, there's a big pullback from the Urals. Do OPEC need to consider this in their thoughts? Albert, one thing we're not considering, and I don't think we've even mentioned it all week, maybe the first time, it's what day is it? Wednesday. COVID. What's COVID? I know in your neck of the woods, however, and looking at, I mean, if Ukraine wasn't on the TV 24/7, maybe the overflowing hospitals in Hong Kong would be on the TV a little bit more often. Hong Kong is getting hit very hard by COVID. Is this a cuckoo in the coal mine for what might come to all of China? And how big an issue is COVID still in China / Hong Kong, which is obviously part of China?
Well, yeah, excellent question. On the Hong Kong side, it's a crisis. Right? It's a crisis for Beijing as well. Beijing was responding with draconian measures to 1 or 2 infections in urban districts, smaller cities. But now in Hong Kong, the infection rate is what I read, say 26,000 new cases per day. Beijing has sent supplies to build a fleet of temporary field hospitals in Hong Kong to bear the overload from the hospitals. Every urgent care bed is taken in Hong Kong. And at the current rate of growth in infections in Hong Kong, they're predicting by July it could be 180,000 cases per day. Right? So the challenge to Hong Kong from Beijing is, how are you going to get your minds around this and fix it? And the answer is, where do we start, right? Where do we start to fix this? So what's happening in Hong Kong is that international investors, banks, brokerages, whatever, are beginning now to just pick up stakes and leave. So Hong Kong is just losing its role as a global financial hub and becoming another provincial city in China as a result of all this. And the broader question for China is, with the rest of the world moving to an acknowledgement of an endemic status for COVID, how are they going to justify maintaining closed borders for another year even? But that will happen. There's not going to be any movement on the border closings until after the fall party conference and the confirmation of Xi Jinping as president for life. So it's going to be a tough year here in China.
And a factor on growth, one would think, right? I mean, although growth's already got a damp sort of outlook, this could become quite a significant weight if the policy of zero tolerance is maintained.
Exactly. It's going to have a big impact on growth.
Randall, meanwhile, back at the ranch, so to speak, in the United States, we have an election coming. We have this crisis, the Ukraine crisis, Biden's popularity ratings, etc. The collision of these things vis-a-vis the energy policy of Biden, the green transition priority of the Biden administration. I think we had the first time overnight a Biden administration official actually encouraging US oil producers to pump more oil. And you had senators calling on the idea of closing down Russian oil. Could we see those two things being an outcome of this crisis?
Yeah, good question, Sean. Look, on the question of Russian oil imports, if the US decides to curtail or cut it out altogether, my take is let's look to the south. We've got Venezuela to the south. You've got Guyana now producing upwards of 300,000 barrels per day. So that's a good option. And let's not take Iran off the table just yet. I think there's good progress in Iran. I think they should try to conclude those negotiations sooner than later and try to get some of those barrels onto the market. I think that'd be a huge plus for Biden going into the elections. Look, with regard to US production, as I said before, it's all about dollars and cents. The private oil sector doesn't really like the Fed to interfere too much in their business. So they do it very quietly. It has to be done very under the table because you don't want to sort of piss off those environmentalists as well that was supporting Biden. Now he's going to continue with his green policy. Undoubtedly, he is going to continue driving EVs and the production of EVs and the rollout of 500,000 charging stations. So that's not going to go away. But U.S. production has really come from completions. Again, we go back to U.S. ingenuity and U.S. innovation. They're able to increase those laterals from 5,000 feet to 10,000 and 15,000 feet. And that is where you get in that sort of incremental production from. So it's not so much about drill, baby, drill, but how can we become more efficient per foot in terms of production?
Just quickly, Randall, to wrap up on the speech, obviously the State of the Union speech last night, Russia and Ukraine were obviously a big part of it. My question is, just so we understand, how emotive is the Ukraine crisis becoming in America? I know that sometimes foreign issues can seem very remote to the daily life of Americans, even though they're big for the rest of us. Has this crossed the zeitgeist? Is Putin and Ukraine now an emotional piece? I saw a quick poll on CNN the other day, as we say, the back of the envelope should we fight the Russian question? There was a big overwhelming support for that. I'm just wondering, from your perspective, where is this crisis in that emotional charge of the American consciousness, and
Sure.
and then the impact it'll have on policy?
Sure. Sean, look, I mean, at the end of the day, I don't think the US, I don't think as citizens and residents of the US, we want to see boots on the ground. I don't think the US can afford another war. Look, we just pulled out of Afghanistan, and you know how that went. I think what we can do is provide support to the Ukrainians in terms of military hardware and in terms of intelligence. And of course, the sanctions are important. That must continue. And that is starting to sink in now. But if you listen
will
to
Biden get credit for any of that? Because you really only get credit when you kick somebody's door down. Can Biden get credit for impacting through the sanctions, which are slow and soft?
I think he's getting some credit. Yes, you can argue he should have acted a lot quicker. But I think he is getting a lot of credit because I saw both Democrats and Republicans cheer him on. That's a big plus for President Biden. But you know, Sean, the average American is more concerned about food prices and having to pay an extra $1,000 to fill up his tank. They're less concerned about.
Tank. He must be literally a tank.
Well, I'm talking about over 1 year.
Okay.
Now, by comparison, it takes me about $11 to fully charge my EV versus $66 to almost $100 to fill my tank. So that's the comparative with EVs versus internal combustion
It's certainly
engine.
a moment. It is a moment for certain changes. Let's go to the survey result. Give Peter the last word. A big overwhelming yes. OPEC need to pay attention here. Peter, the question on that, just to follow on from that for you to close us out, is how solid are these prices? We saw a quick drop off only last Friday when there was some indication that oil wouldn't be sanctioned. That I'm wondering how inflated the geopolitical piece of this oil price is, and how quickly could it change with a headline saying, the foreign minister of China, for example, is going to meet with foreign minister Lavrov and have a chat.
Well, that's risk premium and that geopolitics building to price, Sean. Like this, I think we're at $94 or $95, 96. I can't put my mind back to where we were Thursday or Friday, but it's just had such a massive ramp up since then. So there's probably, the way it's going with the velocity, there's probably $8 to $10 at least worth of risk premium, and it would strip out very, very quickly. It could come out in a session or two if there is some piecemeal deal done between all parties and it gets sorted. But if this becomes a protracted situation of what we've seen in the last, demonstrated in the last couple of days as far as price, why can't you see a 125? Why can't you see a 130? It could go all the way to 140. I'm not going to herald those prices, but there's every possibility that if this starts to magnify and Saudis come to the party as far as backing their brothers, Russia, this could really become quite ugly for the consumer.
Well, that's going to have to wrap it up there on the relatively not so positive. I was going to say in my close, and I'll say it as well, I just don't see how this all doesn't lead to stagflation. Perhaps we're already there.
That's it, Sean. That's where it runs.
And you've got to position your policy, your portfolio, your decision making with that in the frame. And we saw what happened to Japan over 20 years when they dealt with that. Not a good one. Let's wrap it up there. Will there be an Iran deal? That's the subject of our halftime talk this week, and another part to consider. Thank you, Randall. Great to have you as always. Albert, thank you so much. Peter, thank you. Have a great week, everybody. Every morning, 10:30 UAE time, we'll be here batting it. All the best.
Thanks, Sean. Thanks, Albert.
Cheers,
Thanks,
guys.
Randall.
Thank you.
Thank you, Randall.